there's a larger kind of underlying question of like, what does it mean to own 100% versus what does it mean to own anything less than 100% versus what does it mean to own less than 50%, right? Like those feel like the three break points. And what self-funded search does, which is really cool, is it allows you to be in that middle break point, which is really hard to do in most investor scenarios.
Buy yourself a bigger business, yes, but buy it with less leverage, put more cash on the balance sheet for some breathing room, and give you that ideal decision-making framework where you can make decisions from a position of strength and not because, you're pressed against the wall.
Are you going to let them hire a new CEO and fire you? And I said, no, I'm not going to give them that control. And he said, it's not a real board of directors then, because like that's the most important role of a board of directors.
Industry experts are highly valuable if they're willing to spend time with you. Just because somebody's been in the space and they write you a check doesn't mean that's going to be helpful. And so a lesson there for me was to have the conversation about their involvement upfront, very honest, no obligations, and just make sure you're aligned on that.
All right. Welcome back to The Intentional Owner. This episode will be something about investors owning 100% and similar, but first I'm curious to hear how your vacation went.
Well, I'm not sunburned, which means it was effective. We went on an international trip to a faraway land called the Turks and Caicos.
Okay.
Which means we didn't go very far at all.
That's like Hawaii for us here, right? It's just like, it's right there.
Totally. Except when you have to connect in Miami, go through customs, and we went with another family who has 5 children. So it was a total of 12 in our party, 4 adults and 8 children. So when people saw us coming, they ran for the hills.
Oh my God. At what point do you actually bring like a full-time nanny for the trip? At some point that has to be worth it, right?
Yep. I think we got halfway on the flight to Miami and we wondered the same question.
Okay.
What about you, Kaustubh? What was up on your vacation, if any?
Well, it wasn't a vacation. I took Friday off. I went to Philly. I did a little like college reunion trip with a bunch of my college friends. So 2 of my close friends from our college friend group got married last year. And so the kind of wedding gift that we all got them is a trip to Philly to visit our campus and all that. And it was awesome. It was like 3 days of just like eating. Like Philly, I think, is the most underrated city in the country, personally. And I think it's a city on the East Coast I would most likely live in if I ever lived on the East Coast again. Just unbelievably good food, super walkable, tons to do. So yeah, we had a great time. It was really nice to be in that group of friends again, because I don't see them as often since they're all Northeast based.
Totally. It's kind of sad once you have family, kids. It's so easy to lose touch with college and grad school friends. So
totally. I feel pretty committed to the idea of, can I carve out 1 week a year to do kind of New York, Philly, Boston? My younger brother's in Boston also right now. So the longer he stays there, the more that makes sense as well.
All right. So let's
Tampa though.
Oh, I mean, so I went to school in University of Florida. So like a third of all graduates from UF feel like they're in Tampa, or it feels that way.
That makes sense. Yeah.
So, and yet
that's what New York City was for us coming from Philly.
Oh, really?
Mm-hmm.
Yeah.
I'd say like probably 75% of my friends from college are in New York City now.
Yeah. All like finance, consulting, investing.
A lot of them have churned out of that actually so far, but so it's interesting. I mean, but no, I guess if I think about it, like one of them went he went consulting, corporate, and now he's at Citadel. So he got taken back by the finance overlords.
Literally.
Yeah, but no, I guess now that I think about it, they are mostly financing and consulting still. But one of them's doing like nonprofit consulting. One is more like LP side investing. So it's broadened a little bit from the very core, management consulting and investment banking.
Yeah, this past year was an interesting year for my peers, I guess. It was the year a lot of my law school classmates made partner in whatever law firm they might still be at. So what was interesting is it made me think, all right, did the path I chose was it the right one? Am I more fulfilled vis-a-vis like my colleagues or my classmates and their sort of
Right.
now solidified careers? And it's
And what's the
just
takeaway?
interesting. Oh, it was just a reminder that big law was never the path for me. So
Hmm.
glad that I made some decisions that proved to probably be really hard in the short run, but meaningful in the long run. So,
Do you have a good friend who has made partner at Big Law that just is pumped about it still?
man, that's a tough question because I think longevity in big law comes from not having like the riding the volatility of the what it takes to be successful in that career.
Right.
Um, So yeah, I mean, I think the ones who have made partner are well suited for it. Are they pumped? They're probably making good money and living,
Hmm.
exciting lives professionally, but there's a toll there. I think we've covered that.
Yeah, for sure. Okay, that's interesting. I'll be curious to see what that feels like when my peers are sort of they're all now in the carry pool, but still like they're the lowest rung in the carry pool kind of at PE funds. So when those folks actually make partner, I'm curious to see what that feels like.
Yeah. By then you're so deep into it, I don't think you remember what it was like not being deep into that lifestyle.
Totally. I mean, this last week we had a bunch of QuickBooks stuff break in our integration, just like classic small business stuff. And I had this moment of like, if I were my my younger self, like what I would have done is I just would have stayed and I could have figured it out. It would have taken like 17 hours in a row of just grinding in QuickBooks to like unmatch, rematch, like do all these entries again.
Yeah.
And I would have gotten it done. And like we didn't do it that way. Like it was mostly like my ops manager. She handled the majority of it. Our bookkeeper did most of the reconciliation. So it was slower but more manageable. And there was a part of me that was like, is this better? Like, am I better at this now? Or like, should I have just stayed up till 5 a.m. and gotten it done?
Yeah, it's a good question. I mean, then you have the hangover from the 5 a.m. all nighter where like for 2 days you're unproductive.
Right.
So sprint
Yeah,
versus marathon.
I guess that's right. Yeah, no, that is the right. Anyways,
There is no
so much for
right.
talking about our vacation.
Yeah. All right. So let's pivot back to something more interesting. Since
Hmm.
our hairlines are not enviable, tell me about the hat you're wearing.
Well, I've got a Seattle Sonics hat.
So cool.
Go a little retro. It's sad that it's retro. I'm hoping it's at some point going to be not retro again.
For all of our listeners who are under 25, that's a former basketball team in Seattle.
That was the Clay Bennett Oklahoma City like steal. Right when we had Kevin Durant and Russell Westbrook, I was in like fifth or sixth grade at the time, so I was also like really into basketball. You know what I mean?
Yeah.
Oh, that was like the tragedy of that era.
And similar to the transplant tragedy in our era, as I take off my hat, then they
Exactly.
transplanted to OKC,
Hmm.
right? And
They
then
did.
Billy Donovan got hired, who was the coach of the Gators when I was in college.
Oh, interesting.
So I
The
am
one thing,
a fan.
what I found very annoying about the move to Oklahoma City, outside of the actual move, is they like supposedly like when Oklahoma City's in the playoffs or something, they'll put up the infographics right on ESPN or whatever, and it'll say like last time Oklahoma City has won a championship is 1979. It's just like that's just not true. Like the like. You know what I mean? Like you don't like acquire the history of the franchise when you move it.
What are you
Um,
talking about? The books and records are always acquired by the purchasing entity.
Yeah, right, but like no, like the idea that in 1979 the Oklahoma City Thunder won the NBA champ is just what are we doing, guys?
Oh man, we are really taking advantage of our like SMB jokes here.
Hmm. Exactly. Anyways, that was so anyways, we're hoping, every couple years there's a new rumor of some owner who wants to bring a team to Seattle. It was kind of a bummer when Steve Ballmer bought the Clippers because that was, he was a
Yeah.
big hope in Seattle for that. He still lives here, I
Yeah.
think. Um,
Yeah, for sure.
but
But you got
yeah,
a hockey team, so
that's
and a
true. And
soccer
also, I'm wearing
team.
my Kraken hoodie too.
Yeah. You have a soccer team.
We do have a very good soccer team. That's a lot of fun. No, we're in a good spot overall, but I think like this is actually a basketball city at its core. Um,
Hmm.
like I go to at least one or two Seattle Storm games a year. The WNBA team, really good turnouts for those games. Really like hype audience. The city's ready for a basketball an NBA team again.
All right, for all of you who can't see it, I'm wearing an SM Bash hat, and we're gonna kibosh the no free ads rule today by saying that next week. Sorry, we're recording this on March 25th. But next week, you and I are going to be in Dallas for SM Bash, and we're going to go have a live. I don't think we're going to record. We're just going to have a live conversation, akin to our weekly pods here. And so if you have anything you'd like to hear from us on SM Bash, DM us on LinkedIn or on Twitter, and we'll have some fun next week.
Sounds great. Maybe we try to record and release it later. I don't know. We can figure that out later.
All right. So today, like Costa previewed, we're going to talk about the decision to raise equity from investors implicitly, like as opposed to funding 100% of the equity yourself and owning all of it. And so, Costa, you're more recent to that decision than I am. And I think the punchline is we've generally taken the same approach, but let's just go into the why. So like how what's your philosophy on self-funding your acquisition versus raising money from investors?
Yeah, I mean, to me, I was always more focused on how do I buy a high quality business. And to me, size of business is correlated to business quality. Not always, but it's correlated. Um, and so the size of deal I wanted to go after, I just couldn't buy by myself. I needed to bring in investor capital. So that was more how I thought about it. There is, in terms of the practical issue,
Mm-hmm.
um, but there's a larger kind of underlying question of like, what does it mean to own 100% versus what does it mean to own anything less than 100% versus what does it mean to own less than 50%, right? Like those feel like the three break points. And what self-funded search does, which is really cool, is it allows you to be in that middle break point, which is really hard to do in most investor scenarios, right?
Say more because I think I follow, but not everybody will.
Yeah, basically in private equity scenarios, as soon as you start to take investor capital, you don't own a majority of your business. You don't have control of the business. And it's important to note there's a difference between governance control and economic control. And so what I really am talking about is governance control. And so in self-funded search, the norm is you can go raise 75 to 95% of the equity capital, and you can go raise all the debt from an SBA lender, but you could still retain governance control and often economic, majority as well, generally. And that's pretty unique. And I think changes the flavor of the discussion quite a bit.
In fact, I'd go a little further and say in self-funded search, it's the exception where a self-funded searcher would own less than 50% of the economic interest and would own anything other than kind of mostly governance control, maybe with some consent requirements from the investor group. So
That's right.
maybe we talk about, a lot of us can have the opportunity to own 100% because if you so choose to highly leverage your acquisition with 90 or 95% loan to project cost or loan to purchase price, it means if you're buying a business for $3 million, 300,000 could be your minimum equity check, even less in some cases if you structure a seller note or whatnot. But there's a huge trade-off there that when you use that much leverage and that little equity, you're really capital constrained. And so I don't think people, self-funded searchers doing an acquisition for the first time, realize what that means. it truly means almost every dollar of your free cash flow is going to go to the bank,
Hmm.
or going to go to sit in your bank account to give you some breathing room. And the stress that causes, the call it imperfect decision making framework you adopt with that in
Hmm.
mind, is for me the reason, one of the many reasons to take on investor equity, which is buy yourself a bigger business, yes, but buy it with less leverage, put more cash on the balance sheet for some breathing room, and give you that ideal decision making framework where you can make decisions from a position of strength and not because, you're pressed against the wall.
Well, the one adjustment I'd make to that when I talk to searchers is like you can only access that leverage on the buy, right? Like you can only access that max SPA leverage when you acquire the business.
Yep.
And so to me, I generally say like still go get the max leverage you can get, but minimize like try to also maximize the amount of cash you have set aside, right? And so it's one thing if you're putting in just enough equity, but it's all of your savings, right? It's another thing if you're raising capital and you're going to set aside, you've got 400K sitting in your bank account, because then if you've got 600K worth of debt payments a year, you've effectively got 9 months of debt payments sitting in your bank account, and that's actually a lot of flexibility. That to me is real downside protection, and where I would rather searchers go lever all the way and set cash aside rather than kind of lower their upfront leverage.
Right. I very rarely see people do that. I mean, I think there's always a conversation about how much cash to put on the balance sheet at close, but really rarely see searchers say, all right, the business probably needs X of working capital. This
Mhm.
amount of it will be in cash, and then decide to take 3 times that much cash. For whatever
Right.
reason, that's just not part of the calculus, because I think a lot of self-funded searchers say, for every dollar of equity I raise, like I'm trading down my ownership percentage. And, in hindsight, probably not ideal to think about it that way.
Well, I don't know if you recall, but when I was trying to raise my investor capital, I tried to go raise extra cash to put on the balance sheet because I wanted to avoid this issue. And I ran into the SBA problem where they were kind of like, hey, if you just have extra cash to put in, we're just going to reduce the loan size. Um, I don't know if you recall
Wow.
that. I was trying to figure out, is
No,
there a way
I
to
don't.
structure around that? Yeah, no, it was a whole thing where like, okay, well, what if we raise the capital in a different entity that then is, excess? Like, so I actually ran into a structuring issue when I tried to do that, which is why I ended up just doing the max leverage or close to the max leverage.
Hmm.
And like I had way more investor appetite than what I actually raised, and I would have happily raised more money. It just like didn't quite work.
Huh. Interesting.
That might have been lender specific also. It's hard to say really, right? This is like one of those areas where like every lender looks at it differently. But on like the theoretical level, I totally agree with you, right? Like bring as much cash to the balance sheet as you can on day one.
All right, so let's get into like the pros, because we're both going to lean the other way. So let's start with, what are the pros of owning 100% of the business?
Hmm.
And
I mean,
that
look,
being a
like,
proxy for governance, unilateral governance control.
yeah, to me, it's like whether you have, lateral governance control or like really strong majority governance, the way you do as a searcher, as a self-funded searcher, um, like those don't feel that different to me. What's actually different is more of it's like a softer feeling of responsibility, right? Like, or at least for myself, speaking for myself, like there are a lot of moments where I'm like, I wish I owned 100% of this because I feel like I want to take this week to like recoup, regenerate, all of that. And I have a little bit of a voice in the back of my head being like, hey, like you're a steward of your investors' capital, right? Like they didn't pay you to go take a vacation. I think that is the mentality that, and maybe not all searchers feel that, but I think that to me feels like the real difference or the real pro of owning 100% is like it's truly choose your own adventure.
I'll add that a lot of times searchers end up wanting to do things that might go against the grain of like the consensus of what investors would like to see. And sort of the more entrepreneurial you are, maybe the more you have a track record of going against the grain, I think you just retain the ability to do whatever you want. And
What's an example of
Um,
that? What do you think are scenarios in which like a searcher wants to do something that the investors like don't quite see as being, the obvious choice?
I've seen a couple instances where, like, and maybe this is the wrong lens to think about it, but going after a second deal, maybe in an unrelated space or like a, related but not ideal, perfect overlap industry or what have you. They want to take bigger risks. Maybe they want to jump geographies where the investor group would say, "Hey, like just be patient, keep building," and they want to move faster. So, yeah,
Hmm.
maybe it's industry jump, geographic jump via deals, and then just sort of riskier decision making that an entrepreneur who owns 100% might be comfortable taking the risk.
That's interesting. Yeah, I feel like I think of it almost the opposite, right? Where like I think I've thought about it more of like, okay, like how do I want to pace myself in this? Because my instinct is to like go full out.
Yeah.
But you're right. Like, especially for a new operator or like somebody new to running a business, that feels like a feature of having investors, right? Is like they will help slow you down so you don't go jump off a ledge by accident.
Right. Yeah, it's funny you say that. But I always, you tend to have like very independent thought, unique independent thought about your relationship with investors. And the question I get about investors from searchers is like, again, I've said this before, it's kind of like, how much do I have to give up of the equity in order to have investors, which I think is a tough way to think about it. And
Right.
then the ask is, well, what am I getting from investors that's besides their capital? And so
Hmm.
like implicit is the question, like how can investors be helpful? And so the comparison versus owning 100% is when you're 100%, like it's an echo chamber. You are the sole decision maker unless you've set up a mentor, a coach, something. You don't have anybody that's there to help you make decisions, think through hard things, be a sounding board, you name it. And you've got a great setup there, like formally and informally. Maybe start there. Like, how have having investors helped you unrelated to the dollars and the economics?
Totally. I mean, in a lot of ways. The So I have 12 investors. Um, which in hindsight is probably like a few too many. It's a lot of people to herd.
Yeah,
But the problem, what I realize is like up front, you don't necessarily know which investor's skill set's going to be helpful in your journey. So I have a good
100%.
range of skill sets, but I didn't know in advance which ones will be the ones I really want to call upon.
Yeah,
Um, so that feels okay to me that I have, and like the 12 people I have are all people I know and they're smart and they're, people I could really rely on for advice, I think. In practice, I'd say, probably 4 to 5 investors have been pretty, just like ongoing sounding boards for me throughout the last 3 years. And some are like, like you as an investor, you're able to give really good insights into how I like stack up against other searchers, which helps
yeah,
calm my like more competitive, self-critical brain.
sure.
And we'll connect maybe once a quarter, once every several months. And then I've got some other investors who are like they're in the driver's seat running their own business right now. And so like they're people I'll talk to like once a week, if not more. And we're more in the weeds with each other, just like trading the gut punches we've had any given day. And so that's more like that feels more like emotional support and tactical support. So there's a wide range there.
And so, did you set any of that up formally in your call it board of managers or whatever, or have you
Yeah.
set that up informally?
A little bit formally. I have an advisory board. We meet roughly once a quarter, but I haven't been great about actually calling it on a quarterly basis. So I think we've averaged probably two meetings a year. It consists of two investors and 3 outside advisors. So it's not actually all investors. And I thought about, do we have a proper board of directors, real board meetings and all that? And the real takeaway that I talked to Justin Vogt about it before I bought my business, and his point of view, which is correct, is basically, are you going to let them hire a new CEO and fire you? And I said, no, I'm not going to give them that control. And he said, it's not a real board of directors then, because like that's the most important role of a board of directors. So given,
That's a good
and
point.
he's right. Yeah. So given that, we called it an advisory board, and it's really designed more for my support. Um, and all of the other investors I have pretty informal catch-ups with when it feels relevant, when they have some sort of experience that I want to hear about and like leverage.
What's the learning that a searcher that's, maybe raising right now or going under LOI that they can glean from how you set things up? So 12 feels too many because it's, there's a lot to herd there. But is there a right number? Is there the right mix of personalities, current jobs, skill sets? Put more around it that people can use as tactical advice.
Yeah. I think, how big is the check people are writing relative to, how important this is for them? You know what I mean?
Yeah.
I think to help lower the stakes for you as a searcher, it is nice for it to feel like, hey, no one here wrote a life-changing check, right? Like like it might be really life enhancing to the upside, but it's not going to be life,
Hmm.
destructive to the downside. So I would think about it that way. And so like, no one on my cap table wrote a check that felt like they were reaching. Um, I think in terms of who the personalities are, who the skill sets are, I'd really be thinking about like, do these investors actually want to be involved, right? Like they're like an investor with great background and great relevant experience, they might not have the bandwidth to be helpful or actually want to do that.
Right.
And that's okay, right? As long as you guys have figured that out up front. And so I think like there's a range of skill sets from small business operating to, growth to people management to EQ, all of that. But it's more relevant is like, does this person actually, are they interested in being that support person for you? Because you can't force that part.
No, and to be clear, there's probably some benefit to having the highly involved and then the very uninvolved folks.
Totally.
And maybe the point is there's a benefit to having a mix of everything because if you all you had was call it peer operators in your cap table and advising you, everything is always going to feel hair on fire.
Yep.
Everybody is going to have the same biases from being in it, feeling the stress. I actually think there's some advantage to also having the folks that are older or just old with a lot of experiences and reps to be able to stand back and not get caught up in the trees or be able to see the whole forest in this game
Yep.
you're playing. um I, I don't know. It's hard to find those though. That's the hard part is searchers will say, I want both. I want sort of peers and then I want mentors. How do I find mentors is always the
Right.
question I get. Where'd you find yours?
It's a good question. I mean, I've generally thought of mentors as like not ideal, but you want to have a mix of ages, right? Like what you're saying. But I think the most helpful mentors I've had are the ones that are sort of 5 to 10 years ahead of me, right? Because once they're 25 to 30 years ahead of me, it's a little bit harder to connect. And frankly, they're just in such a different phase of their life. But 5 to 10 years in front, and then it's not necessarily age, that can also be experience, right? Like Bradley, who he's one of our investors.
Yep.
He and Logan, like they already did their search process. He's only, I think, a year older than me, but
Yeah.
he's sort of 4 years ahead of me, 5 years ahead of me on the search, side. And so he's been an incredible mentor for that reason, because it's close enough that he remembers it, but he's removed enough that he can provide some perspective.
It's a great point. Again,
What
hard to
about you?
find that.
Yeah,
Um,
who has it been for you?
well, so I've raised now for a handful of different acquisitions, and I have found maybe a few rules of thumb to be helpful. One is industry experts are highly valuable if they're willing to spend time with you. Just because somebody's been in the space and they write you a check doesn't mean that's going to be helpful. And so a lesson there for me was to have the conversation about their involvement upfront, very honest, no obligations, and just make sure you're aligned on that. Um, Another one is I found the advice from people who have run small companies, emphasis on small, is a lot more useful than folks who have impressive resumes. Maybe they're private equity investors or ran big companies. I just didn't find their advice to be as tactical, as useful.
Hmm.
Maybe their mentorship has been, but not their tactical how to when I have a problem.
I mean, the reality is, right, like a CEO or a business leader in a large organization, if they're doing their job well, they're not that tactical, right?
No, they're not. And they're managing other managers. And so they're really
Correct.
removed from some of the really big problems we face as small business owners.
Totally. Have you ever paid like for consultant type industry expertise or anything like that?
Not yet. Not in the advice realm. We have for deal sourcing, but not for like to help me out as an advisor.
Right. Because that's one of the things I hear from searchers. They're like, hey, like,
Should you
why
pay?
am I
Yeah.
giving up equity? That's expensive. I could just pay for advice.
Yeah, I would say ideally you don't have to compensate at all, right? I mean, maybe you have to ultimately, and it's probably worth it. But I've seen most people have enough of a network or be able to hustle to find some mentors that they don't actually have to pay. They can either get them to be aligned via the equity check the investor advisor is writing, or well, yeah, it's probably the only way.
Right. Well, but then you're paying an equity in theory, right? To go going back to
Yeah.
your point of like giving up equity.
Yeah, but if the decision is I'm going to raise anyway.
Right.
Um, Another thing is along the way, it's been helpful to have people who know me invest and advise because every piece of advice needs to be with the lens of like who's the decision maker in mind and what that personality is. So, for me, generally the advice is like take a deep breath, slow down, don't sprint, don't rush, don't worry, like this is the long game. And advice it's important that the advice giver knows the recipient really well. So, like
No,
if
that's
you
spot
can
on.
mentors that maybe know you as well as like what the heck you're doing or the business or the industry you're getting into, I have found to be really helpful over the years.
Yeah, I mean, like for myself, I think the version of that is I have very high patience with other people and very low patience with myself, right? And so I'm tend to become quite self-critical. And so I think some of my mentors that have been quite helpful is just sort of being like, hey, like you're okay actually.
Yeah.
Like
Yeah,
you're doing fine. And that helps just turn down the volume a little bit and allow you to make a good decision.
exactly. So all those things are to say, um, I think maybe very rarely is the cold investor very helpful. Other than that, if they want to invest, great. That's is supportive in itself.
Hmm.
And just be honest about the level of involvement going in. That's all I suggest.
Can we talk a little bit about investor mindset towards returns?
Sure.
And
Yeah.
like finding investors that sort of match up with your goals for the business. I'm curious if you've thought about what types of investors there are, not from the skill set perspective, but from the returns expectations or deal expectations perspective.
Yeah. And in our SMB TA world, like there is a range of investors on all spectrums from like time horizon to sophistication to expectation over communications to returns it's just across the board and it's still the Wild West, right? So these are all the kind
Hmm.
of conversations you should have. I would say like the lead question should be time frame, which we've talked about, because
Yep.
in our game of potentially unlimited holds, there's no liquidity mechanisms, and these things, these small business participations, it's hard to know. Is the entrepreneur going to get sort of tired and frustrated after 2 years and want to eject, or are they truly going to be a 30-year owner? And what does that mean for liquidity and how investors get, their returns? I think that's the first question, right? And are they okay with the searcher's plan, however,
Right.
detailed or not that it is?
Right. See, I feel like I copped out on this when I raised money, where I was just like, "Hey guys, I'm not really sure, so like, be ready for anything," which I I don't know, like that feels like a cop out, but felt honest. You know what I mean?
Yeah, but I mean, so I've been a part of a lot of these participations now, and what I can say is, one, I haven't been in it long enough to opine on like forever holds, right?
Of
Like
course, yeah.
forever outlives our careers. So
Right.
what I can say for sure though is so far the experience has been all of us are in this shorter than we thought. In a particular business for a shorter
Mhm.
period of time than we expected going in. So maybe that means like there is more liquidity than we thought. It's just not on a time frame. Uh,
Right.
I think another one is you mentioned this earlier, but to the extent you feel like an investor is investing more than they should, like that's bad for you, even if you need the dollars, um,
100%.
because then they're going to be, it, unhelpful. They could be forcing you to spend time interacting with them and making them comfortable. That's just not a good allocation of your time. So I would really sort of fish that out. And the last thing is like there are funds now or pools of capital that are coming into our world that are investing. And so, I don't know them very well. I'd want to know like, can they be helpful from their pattern recognition because they're investing in a lot of folks?
Mhm.
And maybe it's their job to be helpful too. So I don't know. That's a world I haven't poked very deep into.
Yeah, I'm in a couple deals with, the fund, like a one or
Yeah.
two of the self-funded search funds. And it's still relatively new for me as well. So I don't, but it is interesting, right? As soon as it's a fun type of capital, a lot of incentives start to change, a lot of requirements start to change. So I'm curious to see how that does for self-funded search if it becomes more institutionalized.
Yeah. Especially if those funds have like maturity dates. And so they have to have liquidity. Like how are
Totally.
people dealing with that?
Right. I mean, like I've had this feeling for a while of like I said, when I raised money initially, I said, "Hey, I don't know exactly how this is going to play out, but
Yeah.
there's a lot of different paths." Um, what I have kind of this like dream hope of a couple of years down the road when it's clear, equities in the money, like there's good value there, to
Yeah.
be able to say to investors, "Hey, like now I actually do have a plan, right? And like this is the new plan, and this is what I'm trying to do for the next set of time or whatever you want to call it." Like now you get a chance to basically rebuy into the business or sell. And when I say sell, I mean like investors can sell their share to
Yeah.
other investors within the business or just sell back to the company.
Yeah.
Um, Such that like there's a second phase of ownership where investors have selected in again, basically to whatever vision I sort of put out. And like right now, we've determined a company vision internally, which is to build an enduring tree care business by empowering our people to be best in class. That feels really good to me. It does involve making decisions that are not going to return financially in the next 2 years, right? Like
Right.
it by its at its core, it requires making decisions that are 10 years oriented, not 2 years oriented.
Right.
And like they didn't sign up for anything that clear anyways. I would like to give them a chance to say like, hey, here is the new plan. Do you want to sign up again?
Yeah. And frankly, from the investor's perspective, that's pretty unique. We don't often, or I don't often see that happen. But I also don't go into these opportunities with any kind of expectation that there's going to be like, this is what's happening until it happens, which is usually like, hey, we got an offer, or hey, I'm getting worn out and I'd like to think about alternatives here, which is
Hmm.
usually what happens. It's not like, okay, I've sort of gotten to a position where now it's sustainable. So you
Right.
have the option. That's pretty rare. And I think too, if from the investor's perspective, again, I hope it's useful. Even though what we sign up for and the materials we read are a lot about like the business that we're buying and the industry that business is in. Most of us are signing up to just back a person. Like we are backing a human being who is wanting to take an entrepreneurial adventure and bet on themselves and go put in way more work and deal with more stress than maybe they know about. And so that's really what we're doing is we're just sort of backing somebody to go on an
Totally.
adventure. And so like did it really matter what you bought or how long you hold it? No, like I'd gotten to know you enough to know that I was willing to bet some of my savings on you. And no matter what you do, I'm probably going to trust it, especially if the communication is good.
Right. That's a good segue. Communication with investors, right?
Yeah.
I like what is good? What does good look like?
Well, I would tell you this is kind of like one of my pet peeves that I've built up over the years of seeing a lot of searchers acquire. I am fascinated in a not positive way about regarding communication. Like, and maybe it's just a philosophy my brother and I had. I always think about him because of the first two that we bought. It was together. And the example I give is especially in that first one where we broadly raised from about a dozen people, we sat down every Friday for like 6 months or maybe it was a quarter, but every Friday we sat down at the end of the day when we sent everybody home and we pulled up the computer and we like just wrote a couple things. And sometimes it was a couple pages and sometimes it was a couple paragraphs. But every Friday they would get an email saying like, hey, this week was crazy. This is what we learned. This is what okay. These are the punches we took to the nose. But just so you know, like we're here, we're good, like, and we're learning. And
Hmm.
I got the advice to do that before buying that first business. And I remember thinking like it was also an opportunity like this. This feels like therapy for you and me to have these
Hmm.
chats every week. Well, it kind of felt like therapy as a business owner. Like I was going to vomit onto a Word document and just rip it out. And it was a really good way. Investors, when we sold, ultimately said like they would back us again just because of how we communicated, sort of notwithstanding the outcome.
Hmm.
So
No,
today
that makes
I'm
sense.
fascinated by how little communication I get from the folks I'm invested in. That's my
Really.
punchline. Yes.
And so, like, what do you think is average?
I would say the average is almost having to ask for the minimum info rights in the governing docs,
Hmm.
which is not great.
Not great.
Like
What do
you,
you? And so, what would be good, right? Like, what would be like if you had, you know, perfect, like you got to say, hey, like this is just what I want. Like, what would it be?
so a couple things. I think one is the cadence slows down over time. In the early days where there's a lot of risk, a lot of learning, a lot of all of it, it should be more often and less intense. So maybe that means every other Saturday in the first month or two. Just a a, a riff on what you're learning, what you're going through, just letting us know you're okay. Maybe after the first quarter, it's monthly, maybe not even like P&L and balance sheet, but like, hey, revenue, we're profitable. Here's the learnings, pro and con. And then maybe after a couple quarters or maybe after a year, it becomes like quarterly financials and MD&A, like it's just a letter from the owner saying what's
Hmm.
going on. But it is fascinating how often like not even quarterly financials will show up and we have to ask.
Hmm.
It's a
No,
shame.
it's interesting. I mean, I guess when I started, I definitely the first couple of months I was sending like weekly, like, hey, this is the latest. Pretty quickly though, I switched to monthly P&Ls and balance sheets. But then and so that was like year one and most of year two. But then I think like midway through year two, it started to become like, whoa, there's a lot going on here. I'm struggling to keep up with this. And so it felt more time constrained than I expected it to be. So I think that's when I shifted to more like quarterly or probably every 6 months, if I'm being honest.
But that's year two,
And
right? So
yeah, in year two, that's right. And then year three, exactly. So now, or sorry, yeah, year two going into year three.
so by then you've earned a bunch of trust. I'll like without showing what you shared, I'll describe it. Your sharing, your communication was massively thoughtful, lots there, and a little less frequent, which but you bought the goodwill to do that cadence through how
Hmm.
thorough yours was. You also shared something that we almost never see, which is essentially like a KPI dashboard or a consolidated version of that, which
Yep.
another thing is like how few searchers know what a KPI dashboard is, which is why you're gonna teach it again at SM Bash because
Yep.
like just having a handle on those indicators is so valuable, and then to report on them is such a good practice, but it never happens.
Yeah. No, I mean, that's the financials are such an output, right? That like, and I think I was going through this process also where I was showing investors, hey, like our revenue looks good, but our profit doesn't look good because we're going through this big J curve. But like, here are the leading indicators that give me, um, comfort that we will come out of the J curve. And so
Yeah.
I felt like that was how I kind of back up my confidence with some data.
And to be clear, we did the same thing when we were first time operators. I didn't even know what a KPI dashboard was, but we just had this daily tracker that we would manually input the things revenue,
Hmm.
rentals, PPC spend. And it was one of those things where it gave some mental freedom to us that like we could be anywhere on planet Earth. But after a few months, if I could just see the dashboard and the output, I knew exactly what kind of day it was. And it's
Totally.
very freeing.
Oh yeah, just to have that gut sense. I mean, now our operations manager, she fills out our weekly kind of dashboard. And so I just look at the output of it and I can kind of sense at where I'm like, hey, this something seems wrong or something seems a little bit off here. And I'll dig into it with her. But yeah, I've find like it took a couple years, but I've built that gut sense now of like, was this a good week or not a good week just
Yeah,
by looking at a couple numbers.
totally. Totally.
Uh,
So it's all those things where we we now with reps, you and I know the kind of things that can be very helpful to a first-time business owner just in the seat. And without investors or some sort of like mentorship, how are you supposed to know, especially for people that don't come from investing or operating backgrounds? I don't know. That's the value in having investors, I think, is the benefit of that pattern recognition that you don't have.
I mean, one of the most challenging points in this journey so far for me was kind of in mid 2023. So I was about a year and a half into the business. Um, is that right? 2020? Yeah, 2023. And we were way off on our 2023 budget. I was pretty naive about how much I thought we could grow and come out of the J curve fast. And the reality is like it's going to be way slower than I expected. And interest rates had doubled on me. And so all of these numbers that I had projected at the beginning of the year were just looking really unlikely. And I remember because I sat down and I was like, okay, I got to like really reset expectations because this is like what I had thought I could do this year just wasn't correct. And so it took me a while and I put together this like pretty large deck effectively reforecasting the rest of the year, talking through cash flow for the rest of the year and sending that to investors and taking questions, if needed. Not I mean people were fine with it in the end, but the act of doing that is sort of a level of discipline that I think I would have had a hard time doing on my own if I didn't feel like a responsibility to
Mm,
report out. You know what I mean? That like it's one thing to miss a budget that only you've seen. It's another thing to miss a budget that, 12 people who've given you money have seen.
interesting.
Um, and so I think there's a level of accountability that makes me a better business owner, but it's more stressful for sure.
Totally. Although I think that stress, it depends on the person. Many of us feel more stress from like the internal expectations we set
Hmm.
versus the external. but the
Mhm.
external provides you a level of discipline, right? So,
Right.
hey,
Well, the
here's
flip side of what I'm saying, right, is like if I didn't force myself to sit down and report out to investors, hey, this isn't going as well as I thought it was going to go, like it wouldn't have flagged to me that, hey, I need to course correct, right?
yeah.
Like it wouldn't have felt as urgent to course correct to find new strategies. I could have just let it slide for another 6 months before I realized anything was wrong.
All right, so let's pivot a little bit to like governance. I'll call it like governance means mostly the rules of the game as to who can make what decisions on what items with what consent. So really the
Mhm.
question is in the self-funded searcher context, what can the searcher, the business owner do, decide on their own versus have to get some sort of consent or notice from their investor group? What I can say is, I'm not sure I have a ton of confidence actually in this. It used to be more loose than it is today. I'm going to say that like as a blanket, where generally maybe 5 years ago, most people that I saw raising from investors would generally not have a board, would generally be able to do kind of anything at any time in running of their business. Investors essentially had zero say. And while that is still the case on occasion today, I'm seeing more of the active investor group have input as to governance. And this is all like the operating agreement or the shareholders agreement is where the language here sits. But maybe I'll ask you, like, if you're willing to share your own experience on governance, and then like, just general thoughts on governance and deals you invest in.
Yeah, no, I mean, I was definitely in that former camp of pretty loose governance stocks where investors, or let me say, the things I can't do on my own are I can't raise my salary. That was sort of predetermined with the investors. I can't raise new equity without giving investors the chance to participate,
Which is
pro
normal.
rata,
Yep.
which is normal. And if I want to sell, the investors have the right to sell alongside me, which is called a tag right. That's also super normal.
Yep.
That's it really in my document. Where I sit today, there's a couple that I think are kind of maybe missing in hindsight. One, which Mill, who runs Federal Fund, he flagged for me, which I hadn't even thought about when I did my deal, is you need to have a protection as an investor that the operator can't change the operating agreement. Which that's just like not in my doc, I realized, and I that was not intentional.
Yeah.
Because then all of a sudden none of this matters if like the majority owner could just change the operating agreement.
Yeah.
Um, that's a big hole. You could drive a truck through that hole.
Yeah. 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 That's
And so
hilarious.
that's one. Um, I've seen some that have investor approval over raising new debt or new equity. And generally, that'll be separated out between kind of operational debt, which I consider, like new vehicle financing
Yep.
or something along those lines, versus like, hey, we are refinancing our term loan facility or we're taking on new debt to buy a business. I feel less strongly about that, but I do see that a little bit more now, and you probably do too.
Hmm.
The only other, financial reporting is one that I'm seeing more and more clearly outlined, which I don't think I had that. Maybe it was like a quarterly or so. I forget what was in my document, honestly. But, I think of governance as there's three buckets. There is unanimous requirement, which is the searcher and the investors. There's majority requirement, which is generally the searcher. And then there is kind of like searcher doesn't get to vote, like investor majority, where like just a majority of the investors get to approve something.
Interesting.
Um, and so that last bucket, you need a mechanic in your agreement that basically says like, hey, if an investor doesn't reply, they've effectively voted yes, right? You don't want that default to be no if somebody's just like non-responsive, because that could really,
Hang you
just
up.
sort of like hang you up exactly. So I think I have it set up where if a investor doesn't respond within 4 business days or 5 business, something like that, like
Yeah.
their vote is counted as a yes on the motion. But the couple items like that are for me are like compensation, right? Or it's really just that I think in my doc.
So none of that sounds crazy. And I don't think any of this becomes complicated. I think when you have to raise more money, call it like maybe when the dollars aren't the trigger. It's like when you have to go to outsiders, people you don't know,
Hmm.
cold introductions to raise money is when I think the governance control shifts. You end up with investors who care more about that because there's less relationship to lean on. I see a fair bit of compensation, lack of governance, or governance in the investor's benefit. Things like salary increases, but also like bonuses. Um, are they mechanical? Do the investors decide? Does there need to be any kind of consent? Comp is a complicated discussion because I generally think when an SBA loan is involved, there's really good alignment between searcher and investor because, like, to the extent he or she decides to increase their cash comp, well, they're just pulling cash out of the business that could otherwise go to paying down debt or go to paying back the investors, which are
Hmm.
two things that are sort of either directly or indirectly blocking distributions to the majority owner, who is the searcher taking more comp in this case.
Right.
So, I don't ever not invest because there's no comp governance. But I think it's a best practice just to say, look, like I can't raise my comp annually more than a certain amount without consent to the investors. And
Yeah.
I think it's a best practice. The information rights are big, and in hindsight, I would have cared more about those just as a forcing function to get that information. Selling of the business, in my mind, should never be something the investors should be allowed to block because the the role that a searcher plays, the stress they endure, the risk they take on, like I think one of the things they need to be able to do personally for them is to eject and to sell a
Hmm.
business. And even if that imparts a loss on the investors, I think it has to be a right a searcher has unanimously.
No, I fully agree with that. I mean, the reality is in these types of deals, it's not like you're going to bring in a new operator to run this business, right? Like it's just not
No.
feasible the way it is in a larger deal.
Yeah.
So it's the kind of right that for an investor to fight for, it's not that meaningful in practice.
How about this one? Because it goes to like the what did we sign up for as an investor? Should a searcher be able to call whatever you want, do other things, buy another business, take a job,
Hmm.
such that like the business is still running, it's paying off its leverage, but like the horse is gone, right? So if we all
Right.
backed the
Right.
entrepreneur and then the entrepreneur effectively leaves, should we have a liquidity right?
That's a great question. I mean, I've thought about that a lot, right? Because I spend real time writing my blog. I spend real time doing this podcast. I like talking to searchers, and I thought about, okay, like this is time I'm taking that I could be committing into the business, right? And so, what is the responsibility there? That's a hard question. I don't think I have a clean answer to that, frankly. I don't. I think it would be really hard to build it in mechanically into an operating agreement. I mean, it seems to me like it has to be something where there's a general understanding between the investor group and the searcher as to what the expectations are. Um, I don't know. Have you seen anything that's useful in this regard?
It's kind of my best question because there's no good answer for it, right? Like
Yeah.
at the end of the day, anything that goes in a legal doc has to be clean, clear, very clear, exceptionally clear. And so
Yeah.
how do you clarify like what constitutes the searcher doing something so different that an investor should have a right to get bought out or whatever? So
No, I know. I mean, the odd thing is like as long as you still have the personal guarantee, right? Like the searcher in theory is still hopefully making decisions that are most aligned with the investors. The
yeah,
the part that I've seen that's maybe potentially challenging is what happens if the searcher wants to refi their debt, right? Into conventional that might have worse terms than their SBA loan, but doesn't have a PG.
it's a good point.
Yeah. I haven't seen that actually happen, but that
But a
seems
lot
like
of
the
searchers
one
go into
spot.
this with that goal in mind as
Of
fast as
course.
possible.
Exactly. And like that's the moment where all of a sudden the incentives got misaligned real fast.
Yeah. All right. Well, that probably puts a wrap on today's episode, which is a question we get all the time, right? Or maybe we end up helping searchers think through the 100% versus take on investor capital.
Mhm.
Um, let's end with a tactical question, which would be, so if you could only choose one profile of investor, professional, non-professional, operator, or sort of very seasoned entrepreneur, what would the ideal be? And secondarily,
Mhm.
what is like the ideal number of names on the cap table?
I think the ideal would be an exited searcher. So somebody, because I think folks that are currently in the seat alongside you, you can go find that through a peer group,
Hmm.
or like
Yeah.
one of those mastermind, which is what I'm in as well. I think having a personal vested interest from somebody who is out of the seat but lived it, like they're the person who can kind of give you the mix of tactical and strategic advice, right? But they've got stuff to do. And so getting them interested in your business requires them to have some kind of a vested interest. Um,
But then
so
again,
I think that's the one profile.
that
Yeah.
age group is probably what, like late 30s to late 40s,
Hmm.
where they're, well, I'm kind of in that phase. You're
Yeah, you're
still
there.
you're still pushing. You still are in like the deployment phase of capital for
Correct.
your personal account. And
Yep.
so like that alignment's pretty good.
Yeah, and it also, you have to solve for the type of person that wants to do things relationally, right? Like there are lots of people that are their mentality is like, how do I deploy and how do I build my capital base, right?
Yeah.
And like, is this a good use of my time or not financially, right? And I think you can define good use of your time in a lot of different ways. And so like I've made a couple search investments where the actual dollar amount I've put in is quite small relative to the amount of time I expect to spend with the searchers. But like I feel like I'm getting quote unquote use or like ROI on my time in the form of, like getting to build relationships and feel like I'm adding, more meaningful value to like their operation. And some investors think that way, some investors don't, right? So I think that like when I think of the ideal profile, I think it's like exited searcher or maybe like late into their, operations searcher who values getting to be a mentor.
Yeah. That's super interesting. Probably pretty hard to find without a lot of investment in relationships the other way.
Totally. Yeah. And I mean, the searcher, like I only want to do that for a searcher who I think is interested in that, right? Like I'm
Yeah,
not going to
totally.
force mentorship on someone.
No,
Um,
totally.
and so you have to have the right personality match. So I think that's the profile. I think in terms of number of investors, I think it comes down to like, I don't want any one investor to be larger than, I don't know, 20-ish, 25% of your cap table, maybe 20, yeah, 20. And so like that means at a minimum, you probably need like 4 to 5. But I think it gets a little unwieldy as you go over 10.
Yeah. And I am a big fan of like the 5 to 10 range because then you've bought yourself a diversity of backgrounds and perspectives just by sheer luck there. Um, I would say the only thing that doesn't work well is like if and when you get bigger, you're raising multiple times and the cap table gets big in terms of dollars, that just is impractical. So,
No, of
and
course.
yeah, but anyway, that's for another day to
Yeah.
talk about.
Objective one is raise the money, right?
Totally.
That's
Exactly. All right. Well, we will call it a
cool.
wraps on this week's episode of The Intentional Owner. And by the time you hear this, if you've been one of the rare few that get to the end of this week's episode, then hopefully you're at SM Bash in Dallas and we'll be able to see you live.